Hey guys, how's it going? I'm gonna set up this room real quick. I'm having a mentoring session with Angela today. So let me just set this room up and then I'll get started as soon as Angela makes it into this room. So let me just get this set up over here. So if you guys have questions, I'm not gonna get to the chat at all today. This is gonna be a private session for me and Angela. So if you guys do have questions, reach out to me on Telegram. I'm probably not gonna be looking at this chat at all once Angela enters the room. So let me just send out this link real quick to Angela. Give her a chance to enter the room. We should be able to get started. All right, cool. Just waiting for Angela to show up, and then we're gonna get started with this mentoring session. Check my messages. I have a ton of messages today. All right. Just waiting for Angela to make it to the room, and then we can get started. Hey guys, if you guys are sitting in on this session, I'm not going to be answering any questions. I'm just going to be going over this one-on-one session with Angela, but you guys are welcome to sit in if you guys want to. I'm just waiting for her to show up so we can get started. Hey, Angela.
Hello. Hey, yeah, I can hear you. How are
Perfect.
you?
Good. How are you?
Good. Let me see. Can you see me?
No, I can't.
Okay, hold on. Let me see where my video. Hmm. Okay, so I'm not seeing where I usually um, am able to tick the video camera thingy.
Oh, gotcha. It's all right. You don't need to show yourself, but if you do want to, it's usually there's like a toolbar down the middle, and it'll have the mute button, and then next to it will be to show video. But if you don't want to, you don't need to. It's not necessary. Uh,
No, it's I don't see I see the mute button, but I don't see the video camera.
oh, that's weird. Yeah. It should be able to show on there. Uh,
Okay.
yeah, but I mean it's fine unless you want to like if you have something to show me. Uh,
I might want to share my screen at some point. Um, but if this is weird because I use Zoom all the time.
Yeah, it's weird. I mean, usually it's there. Let me see if I can. I'll move you over to a panelist. Maybe that'll fix it. Let's see, and then I'll make you a co-host.
Okay, I got it.
Oh, there you go. Okay, I think that was the thing. You just needed to be made a panelist. Yeah, should be good. Okay,
There I am.
perfect. There you
Hey,
go. Hey, how's it going?
pretty good. How are you?
Awesome, doing great. It's kicking off this trading week.
I know. It's a good day. Well, not really, but yeah, it was okay.
Yeah,
I,
it's kind of a crazy day, but I mean, I still made profit, so I'm not complaining. Profit's profit for me.
right, right. So I have some questions because I think I started with you last year, end of last year, probably in December, and
Yeah.
I've been trading Forex for a while. But I mean, I've only been doing it like part time. I don't do it regular at all, and just been doing it on and off for like 3 or 4 years. Um, but I had never heard of FTMO. And so one of the things that's always sort of stopped me from going further in my trading is I wasn't ready to put up a whole lot of capital to be able to
Exactly.
trade. And so when I saw that, I was like, oh, I can use somebody else's money. That sounds good to me. So I really want to do the challenge, but I don't like to. I like to take calculated risks. So
Mhm.
it's just like I want to make sure I have a good strategy because I don't want to mess up the challenge. I just want to get it, do it, and then start making money. So I had a couple of questions. Well, not just a couple, but several questions because I want to get prepared for it. I want to use the strategy correctly. And the best way that I know to um, fix my thinking is to look at losing positions and to try to figure out what I didn't do right or so I have several candles that I want you to take a look at to for you to tell me whether you would have taken that trade.
Mhm.
Um, and then I have a couple of questions.
Yeah, definitely. So you want to give me those times, and I can pull them up on the
Yeah,
chart.
yeah, and then I had a question right off the top. When it comes to the SR zone, drawing the zones, do they go back for back testing?
Uh, so they adjust as time goes on. So depending on so I'll use it. Do you have like a specific pair that you like? For example, I'll just pull it up here just
Well,
to show.
this one's on US 30.
Okay, perfect. Let me open up a fresh chart here. And what time frame is it on?
This one's on the 10 minute.
10 minute. Okay, perfect. So let me just get this on here. Get this on the 10 minute.
And
Yes.
I was looking back at December 7th.
Gosh, okay, I'll rewind it to there. But yeah, as you rewind time, back testing, it'll automatically adjust as it goes. If
Gotcha.
we go back to like, so you can see right here, like obviously right here, this is where the zones are, where price currently is. But
Hmm.
if we go back to like December 7, where you mentioned price was like way over here. So the zone didn't line up where price currently is.
Right.
So if we go back to like December 7, yeah, like somewhere around there. You can see that the zones are right there. Let me just
They'll
update
pop
this.
up. Okay.
Yeah, it'll pop up, and then as you move forward, they automatically adjust as like new zones are created. Because by every new week or every new day, actually, if you're scalping on the 10 minute, the zones are going to change by the day. If
Okay.
you're trading on the higher time frames, obviously the zones will take longer to change.
Okay.
But if they come back and retest like an old zone that's been tested in the past, it'll just reappear on the chart moving forward. So these
Okay.
zones generally keep on, they usually they repopulate over time. But if price is like so far up here, obviously price is not gonna, these zones are gonna be irrelevant at that point because price is so high.
Gotcha. And
Yeah.
so how often do you redraw your zones every day? Like, let's say before we started with the snipe, when you were just doing the daily position, how
Yeah.
often would you redraw the zones?
So if I'm doing the 10-minute, I redraw it all throughout the day. So whenever
Oh,
basically the way that I would do it is I would draw my zones normally here. Like for example, I'll just draw some messy zones just to show you,
okay.
for example, here. Let me see. Let me go to like a Monday because Monday is usually a good day to start the zone, or Sunday actually when the market opens. So let me just
Okay.
check the calendar to see December. Okay, December 7th. Okay, so December 7th was actually oh wait, no, it's November. December 7th was a Monday. Yeah. So if we go back to like December 6th, which was the day prior, that was when the market just opened for the week. So basically, just for example here, we have these zones down here. And then I'm just gonna draw some messy zones just to show you like, where the zones are, where they were that day before.
Okay.
And then as you move forward, I guess, to Monday and Tuesday. Because if you're trading on the shorter time frames, zones will be created a lot faster. But if you're trading like on the 4-hour, I only draw my zones probably on Sunday night before the market opens, and then again on a Wednesday, because they usually don't adjust as quickly because the range is a lot wider. So like for example here, you can see there's no zones up here, but as we continue on with the week, you can see that it comes back and retests these zones from the prior week. But as price starts to move over, you can see a brand new zone created up here and down here. So this was on the 6th as market opened. And then as we entered later into midnight, the 7th right here, you can see that brand new zones were created over here. So basically, if I'm trading on the shorter time frames, I'm actively looking for new zones. So for example, if I'm looking right here, and I'm looking to take an entry right here, I want to make sure that I turn the zones on just to confirm if anything new has been created. Generally, they're not really that drastic unless prices move like really far out. Sometimes the zones will just spread out slightly. So they'll move out just a few pips away. And then you can just adjust yours and just extend it out a little higher or a little lower to cover for those new zones that get created. So like, for example, here, you can see price comes and a brand new zone created right here. The issue for this is you can just extend this up to cover that new zone that's been created there.
Gotcha.
Yeah.
Now, I've also seen you go to like the 1-hour when you didn't see a zone. At what point are you doing that? When you don't see a zone, where?
Gotcha. Okay. So for the scalping strategy, we don't switch to any other time frames. If you're trading on the 4-hour, so for example here, if I was analyzing this for an intraday trade, like for a couple hours or so, then I'd use the 1-hour. And then this is where I would want to determine, where these other zones are. Because for this, depending on which strategy you're using, for the scalping strategy, we're just looking for rejection points.
Okay.
If you're applying the K2SR strategy, that strategy requires that we confirm when price, breaks and closes past the structure. So if that's what you're looking for, you're going to need a higher structure to know how far, price will be moving from after it breaks structure, like right here. So if we didn't have a structure up here, then you go on a higher time frame, say the 4-hour, 2-hour, 3-hour, etc., to find the higher zone. And then from that point, you just keep adjusting it as time goes.
Gotcha. Okay. So for December 7th, this is for, I was looking at the scalp strategy, so snipe strategy.
Oh, the brand new one, right?
Brand new one. So the 3 a.m. candle on December 7th. And I probably need to see the zones that you draw to see, because you may not have even gotten into that trade.
Definitely. So for the 7th, which time zone are you located on?
Oh, I'm in Central.
Central.
Oh, Central. So that would have been 1 a.m. your time.
1 a.m. my time. Okay, perfect. So let's go ahead and rewind that to here. All right, so from this point, I have all these zones set up. Let me just make sure everything is proper here. Yeah, it looks like it's good. All right, so I'm gonna go ahead and draw my zones real quick.
Okay.
So we got one up here. We've got one right here. This one right here. So for this one right here, you could probably, so this is where it gets a little messy, where it's kind of hard to see where the zones are connected. You kind of have to look a little closer. Like for example, right here, I don't know if you noticed this, but generally these zones right here, they're connected to another line.
Yes.
When you have a zone, yeah. So like right here, this zone actually connected down to here. But since this zone cuts into this other zone, you can just put these together.
All the way down. Okay. And you don't differentiate between support or resistance. It's just a zone.
Exactly.
Because
Not at all.
support turns into resistance later. Okay.
Exactly. 100%. Yeah. So
All
in
right.
that point, I just draw. That's why I use one color, because a lot of people get confused when they see the red and green, and it doesn't really matter because it ends up turning into support or ends up turning into resistance.
Gotcha.
At that point. So I'll just draw these right here. Let's see.
Oh, that's a big zone.
That's a pretty big one. Sometimes that'll happen if there's like some big movements in price. But in some instances, they'll be really tight. So it's kind of a double-edged sword. Sometimes it's good when they're wide. Sometimes it's better when they're shorter, because it'll allow you to get these better entry points. But the zones aren't really that important. I mean, they're important, but they're not super important, because I think the pivot rejection is probably the more important one. The zone rejection is secondary to it.
Okay.
So there we go. We got these all set up right there. I'm going to go ahead and hide that, turn on the pivots. So it looks like you identified, yeah, was there a specific candle here that you identified an entry?
Okay, if you, let me see, on this one, where are you? The 1 a.m.
Right here is, yeah, 1 a.m. Oh, let me go forward one. There we go. So I'm right at 1 a.m. on December 7th.
Okay. 2110. December 7th. Hold on just 1 second.
Yeah, no problem.
Okay. It would have been your 120 should have hit the first level.
Gotcha. Okay. Let me go to the next one. Okay, gotcha. Yeah, so this one.
Okay.
Right here.
So the zone that you're drawing, though, must have been different from mine, because it didn't bounce off the structure. It just bounced off the pivot. So you would not have taken that trade.
This right here, I think I would have taken this one, because this would qualify. Yeah, because for this right here, this would have rejected off both the pivot and off the structure technically. You know, we're just looking for a wick rejection, because usually when you see a wick rejection, it usually indicates that price is like using that specific price point as like a bumper. So basically the price comes up and we would anticipate it to drop from this point. And yeah, from this point, I just take a small scalp for about 500 pips. I think there was something going on the 7th though. Let me, I could check the calendar to see if there was something.
Yeah, because this turned out to be a losing position.
Gotcha. Okay. Yeah. Because I remember early December, it was kind of the market was kind of like weird.
Okay.
During that time. Let me just go back over here. I'm going to see if there's anything going on that day.
And I don't mind losing. I just like, it's like, you know what? Yeah. But it's like, if I did something wrong, I want to not do that again, you know, because that might have been the reason for the loss.
Exactly. Yeah, no, definitely. So it doesn't look like there was news on that specific day. I don't know if there's something else going on. Okay. Maybe I could check through the premium, because I usually give updates if I see something going on weird in the market. So on the 7th. Let's see. Oh, so there was like some stuff going on. I remember I posted this for CNBC. It looks like there was there's new COVID outbreak news. So that's price turn.
Gotcha.
Yeah. So yeah, I had a feeling there was something going on that day. Usually, like, this is stuff that you can't really, I mean, unless you're paying attention to the news, you know, this is like once in a blue moon. It doesn't happen every single day. But I do remember that something was going on that day. It said, like, you know, looks like all our positions are starting to reverse. So it seemed like everything kind of spiked up. So this technically would have been a good position. But I think, you know, when that COVID news came out, it ended up spiking in the other direction that way.
Yeah. See, it hit mine.
Yeah. So that's just that's like one thing that could have affected the position. I mean, there could have been a bunch of different things that could have affected it as well. One thing that I noticed as well is on London Open, it usually has a weird movement. So like, for example, here you can see from London Open, it spiked down and then it has like another impulse where it goes in the opposite direction. It's kind of similar to how it works during New York session, where it moves in impulses. So you can see it dropped exactly from midnight. So as soon as the market opened at midnight, it dropped. and then it corrected back upward. So I think this is what happened with the COVID news. Like the COVID news kind of was released around this time. It came down, and then what happened was it corrected back up. But obviously, if you weren't paying attention to that, you wouldn't have known.
Gotcha.
But yeah, I mean, if I took this trade right here, I would have just eaten the loss. Honestly, I would have just taken it because it's something that we really couldn't have guessed it until later on in the day.
Okay, so let me ask you this. On the candle that's, I think it may be your 110 or 120. Okay, so that one, which one is your actual entry? The one that has the really long wick that goes up to level 2 and truly breaks off the structure, or you would have even taken the one right before that?
I would have taken this right here. So this would have been the actual entry. As soon as this candle closes, I would have taken this one right here.
Oh, okay. So that's what I'm asking. Okay. So you're saying that on that, not the one with the tall wick, okay, the 120 candle. Talk to me again about, because it didn't really hit the top of the structure unless we're saying that structure is so huge, it could have technically, the wick hit a structure somewhere, a support and resistance previously.
Gotcha. Yeah. So basically for that second requirement, it doesn't need to hit the top of the structure. It just needs to reject off a structure in general. Because like if you look over here, you can see that price is rejecting off structure here. It's not really necessarily rejecting outside of it. Okay. It's just you just see a wick, like a wick rejection.
Okay.
Like
anywhere in the structure.
Exactly. Yeah. Because because like I mentioned earlier, it's secondary. Because our first thing that we're looking for is the rejection off the pivot. That's going to be the main thing.
Gotcha.
The pivot is dynamic with price. So as price moves and then you see that hit, the thing with the zones is that they're not dynamic. Once they're set, they're left there. So it's just a secondary confirmation that, first we have the rejection off the pivot. The second confirmation off the structure is going to give you, okay, this is a double confirmation. It's probably going to continue in that direction.
Gotcha.
Yeah.
So you don't use the TS signals when you're doing the snipe?
I don't, but I have used them before. Like I use them for extra confirmation, like a third one. Like, for example, right here, if I was using this as the confirmation, I probably wouldn't have, this probably would have stopped me from taking this trade because it would have indicated that momentum is swinging up. So it's like, I probably shouldn't take this trade because it's going this way.
Gotcha.
And it works both ways. So like, for example, right here, you can see that we have a sell signal right here. And then we have an entry right here where it rejects off the pivot and the structure. If I was to see this, I probably would have been like, okay, cool. If I just rewind to this point and I saw this right here, I'm like, all right, momentum is coming down. So this is probably going to come down further. So from that point, I probably would have entered that for like a small move. And then I probably would have, rode that position there. Same with this direction as well. Like we have a buy signal here. And then we have this, if I rewind to here, we have an actual entry right there where price rejects off the pivot and the structure. So with that said, I would take a long position right there. And then I'd pretty much just let it run. And it would have hit TP.
Oh, okay. Yeah. So my next question then about those signals for the TS, when there's an invalid entry, so that's, let's say that the signal is actually bearish, but the candle is green. Does that give you, can you find one like that?
Yeah, definitely. So let me see. So we have one right here. This is a sell. Yeah. Let me see if I could find one where it's invalid, but it's going in the direction. Let me see if I could find one over here.
Well, I was, the reason I'm wanting to know about this is because one time in a live session, you were talking about, we had taken, I don't know if it was the daily position or a scalp. I can't remember when it was, but basically, let's say we were going long. And then there was a signal that came that was bearish signal, but the candle was still green. So it's invalid. And you were like, oh, that's good. That means we're still, it's probably still going to be going up in our direction. So I was just trying to figure out whether those invalid signals kind of give you even more confirmation to stay in a trade if it's, because it's invalid. So it's going to keep going in your direction. Does that make sense?
Yeah, definitely. I use it all the time. Yeah. So like, for example, like if we're in a buy, let me see if I can find something here. Like if we're in a buy and then, I'm going to try to scroll back some. It's kind of hard to find. It's weird because like when you're looking for it, you can't find it.
Exactly.
When you're not looking for it, it's there.
Right. I know exactly what you mean.
Yeah. Let me see if I can find it.
I should have noted one, but.
Yeah, no, it's fine. I've been looking for these examples as well when I'm going through the live sessions, but for some reason I can never find. Okay, so like for example here, we have a buy signal,
Okay.
but it's an invalid. Or actually, this would probably be a better example right here. So we have a buy signal here, and then if you were entering these trades, and then you get an invalid sell signal.
Yes.
Yeah, so this is a perfect example right here.
That's it right there.
Yeah, if I was to see this right here and I saw, so like now that you have all these tools, like you're able to understand, what the rejections off the pivots mean. So with this said, you have a buy entry right here. Say you entered, I don't know, a long position somewhere over here, because there's so many entries right here. You probably would have taken one, I don't know, something like that right there. If I was to see this and I saw that price was rejecting off the pivot and rejecting off the structure, this would give me confirmation that, price is probably like there's probably some sort of manipulation going on here where they just wanted to spike pricing up and down.
Okay.
Because like one thing that you have to keep in mind too, that all these markets are kind of connected somehow. Like the options market, some people are trading options for these future prices. So depending on where price closes, so this closed at about like 5:30. Generally, at the top of the 30 and the top of the hour, options contracts generally close. So I'm not sure. Do you know how the options market works?
Yes, but not the weeklies. I usually only go pretty far out, like 30 days.
Yeah, so like some markets they have them where they close like every 10 minutes. Like there's
wow.
yeah,
Okay,
there's
I
like
didn't know that.
yeah. So like there's some that close like every 5 minutes, 10 minutes, hourly. So like the 30-minute and the hourly are usually manipulated time points for like right here, because I'm sure that there was probably I would assume there was some sort of strike price like somewhere down here. And I feel like what probably happened was at the very last second, whoever was controlling price spiked price right back up. And that's how it got, it was a sell signal initially. Because if I go back and replay this candle, I'm pretty sure it came down a bit. So do you see that right there?
Yeah, and then went back up. Okay.
Like super quick, like within seconds.
Yeah.
Literally, it came down and then it spiked all the way up. So this was probably manipulated because there was probably an option strike right here for like a put. And then, people were probably all excited thinking that they were going to win. And then at the last second, it spikes up.
Wow.
Yeah. So I only know this because, I've been trading for so long that I understand how everything's kind of connected. So when I see things like this, a lot of people get confused and they don't understand why is there a false signal. Generally, it's because there's some sort of manipulation that happened there. Like for example, here, this was at 5:30. Again, right here, this was at 23:30. See at the 30-minute mark?
Yes, gotcha.
They both have some manipulation going on there.
Wow.
Yeah. So that's something to keep in mind too. When you're trading, if you see something weird, like on the 30-minute or the top of the hour, you don't get like too freaked out, because generally that's probably just some sort of manipulation going on in the market.
Gotcha. Okay. I have a question for you. I can't remember which user it was, but he was using the 5-minute time frame, and you went down to the 5-minute and you were like, oh man, there's some good entries here. And I actually love the 5-minute. But what I noticed was that the 5-minute level 1 on the 5-minute doesn't exist on the 10-minute. And so it's like when price like retraces and touches the level 1 on the 5-minute chart, that's really not a thing on the 10-minute
real chart. Pivot, right? Yeah.
Right. And so I've gotten, just in back testing, burned because it was like that wasn't even a real rejection because it didn't exist on the 10-minute. Even though I may have hit a structure or been in a structure on the 5-minute. So when it comes down to the level 1 on the 5-minute, my question has to do with just, should that even be seen as valid?
I personally wouldn't. Like the lower time frames you go, I think the higher level you go would probably be better, because like the level 2 for a 5-minute is probably equivalent with the level 1 of a 10-minute.
Yes, it is.
Yeah. So like I remember that day I saw it because I know who asked. It was his name Zephyr. He asked and I looked at it and it looked so good. So I was like, okay, I'm gonna enter. And it ended up hitting my stop. I was like, okay, I'm never going back to the 5
Gotcha.
after that.
Okay.
Yeah.
Okay. So we're gonna leave the 5 alone then. Okay. Hold on just a second. Let's see. Okay, so when you're using, oh no, since we're here, let me go ahead and finish this thought.
Yeah.
Can you look at the so that's 1500. So that would be 1300 candle on December 7th, the 1300 candle.
Gosh, all right, let me go forward.
And I have to look to see if this is the 5-minute or the 10-minute chart that I was looking at.
So what was the time again? You said 1300, you said?
1300 because it was 1500 on mine.
Perfect. All right, let me just zoom forward real quick. I didn't realize you went so far back. Let's see. 7th is. All right, I'm gonna let it run through. We are on the 2nd.
Oh no, I'm sorry, Shawn. 7th. I'm still on the 7th.
Yeah, on the 7th, right?
Oh,
December 7th.
yes.
Yeah,
Okay.
because we went far back to find that little example.
Oh, okay.
To
I
the
didn't
20,
realize we
yeah.
went that far.
Oh
Okay.
no, yeah, we are on the November 27th, so I'm pushing
Ooh.
all the way forward to
Okay.
so like, you know, that goes to show that like these invalid signals don't come up very often, but when they do, it's usually due to some sort of manipulation in the market.
Gotcha.
Yeah. And it's just good to know because like sometimes it'll happen and you won't understand, you know, what went wrong.
Oh,
But
I
in
don't.
reality,
Yeah, I'm looking at this like, oh, what happened here?
yeah, a lot of people don't realize that all of these markets are kind of connected like one way or another.
Mm-hmm.
All right, so we're back on the 7th. Let me get over to the 13. There we go. So one thing with the 13 is that this is during the swap spread. So I wouldn't be taking any trades during the 13.
Oh, you don't? Okay.
Because the market closes at like now for FTMO it closes at 120. So I just don't even trade at 1 anymore, which would be 1300 hours.
Okay.
So during that time, I generally don't trade, but I mean, we can go ahead and take a look at it. So like, right, because you can see from like, let me just show you real quick. From the 13th up till the 15th, there's a gap. So you can see from 13, and then it just kind of gaps from 13 to 15.
Right. That's what got me, the gap.
Yeah, because the market's closed for like 2 hours. I mean, if you take the position, it's fine. But I find it to be a little risky because you don't know if like you're going to come back in positions like way up here or way down here.
But this is when you send that message out to take off your stop because of, do you think is there manipulation that happens during the swap or?
No. So what happens during the swap is since the market's technically open, the futures market is always open, but the retail market where we trade, you won't be able to enter or exit trade. So the price is still moving up and down.
Gotcha.
But the problem with you leaving your stop loss on is if price ends up spiking up and you know, you have your stop loss off. I mean, if your stop loss is on and price spikes up, it'll either trigger your stop loss or it'll go into slippage. So you know what slippage is?
Yeah.
Yeah. So one of the two can happen where it'll stop you out. You have an automatic loss, or you go through slippage and you lose more than you would have anticipated. So basically what I like to do is I like to just exit my position before the market closes. And then if I want to re-enter it, I can just re-enter it later.
Okay. So you don't like to have positions open during the swap?
So it depends. If I'm already in some drawdown, I'm like, all right, whatever, I'll just let it run. But if I'm like getting close to like where I can make some profit, or if I can like close out for a small loss, I'll get out of the trade. It's really like case by case basis. Like on some days there's nothing going on in the market, so I'm not expecting it to like really gap up within the next 2 hours. But if there's something going on, so say if there's like the Fed is speaking that day, or there's a presidential election somewhere, or someone is speaking, or someone is doing something, then I would probably close a position out, whether it be a profit or loss, and then I'll just re-enter it and I'll cover that loss later. Because I don't want, like, especially for FTMO, I don't want it to go past whatever my max risk is. I mean, it should never happen because I make sure that my risk is on point. So even if that was the case where it has slippage, I'll go into some negative or like deep in profit, but I'll never go like anywhere near my daily loss.
Gotcha.
Yeah.
So you wouldn't have taken this position, but can we look at it though?
Yeah, definitely. So you said 1300, right? Let me go to 13.
It's like a real big green candle and then a red.
Oh, gotcha. Okay, perfect. So here we are. All right. So your entry would have been this previous candle right here at 1230. Is that the one? Yeah. So this one right here, I would have taken this right here because we had the rejection off the structure and rejection off the pivot as well. So we have that rejection right there. I would have entered a short position right here at the close of this candle.
Okay.
And yeah, obviously would have hit full TP right there.
Okay.
Yeah. So if I did enter this position and say it didn't hit TP yet, I would probably start thinking about closing it as we reached 1330, which is when the market actually does close.
Yeah, that was my question. If it's too close to market close, do you not enter a position? And then when the moves are impulsive like that, because that's, I mean, it's cool when it's impulsive in my direction.
Yeah, exactly.
But the very next candle, it went the other direction. You know what I
Yeah,
mean? And so
exactly.
I'm just like, is that manipulation? Is that, but you're saying it's probably the swap and then market was about to close. So that's probably why we have all that volatility.
Yeah. So I mean, there's a couple of different things that can play. It could be manipulation, or it can also be due to well, actually, no, this is definitely like some sort of manipulation, because if it's a gap, there'll be a gap in price. Like this wouldn't even be a candle right here. Like this would have just been a blank little candle.
Gotcha.
And it would like reopen like right here.
I got you. I
Yeah.
got you. It
So I
wouldn't have
don't
been that big.
exactly. So this wasn't from market close. This was actually from some sort of manipulation. Obviously, you
Okay.
can see clear that it was manipulated, because price dropped from up here like 1,000 pips, and then it spiked all the way up 1,000 pips.
Right.
And generally, it doesn't move like that.
Gotcha. That's what it was doing today, right? That's what we were
Exactly.
doing
Yeah.
today.
Yeah.
Okay.
So when I see price doing this, I usually just sit it out, because I don't want to risk anything. You know, it's like you don't need to trade all the time. Like literally,
Right.
there's days where it's kind of better not to trade, even
Mhm.
though there's possible entries. Like even for right here, you know, you would have won this trade, but I probably would have stuck out, because just looking at price over here, you can see that it was moving pretty crazy throughout the entire day.
Mhm.
So I probably would have sat out this whole session right here. You know, obviously I like when it's smooth like this right here, because
Yeah.
you can just catch all these trades and just ride them all up.
Right.
But if this happens, like for example, that first entry that you saw over here, I think it was like in the morning, right? Or it
The
was,
other one was at 3 a.m. So 1 a.m.
oh
your
yeah, yeah, 3 a.m. So right here. So right here, I probably would have I would have, if I was to take that trade, you know, just disregarding news, I would have just taken that loss right there.
Mhm.
And then I don't know if you heard when I mentioned, if I end up taking a loss, I won't take any more sells until it swings back in the other direction.
Yes, I heard that.
Yeah. So like for
So, but
example
what if
here,
you stacked though? Because that was another question I have. Because it's like I get real squirrely with
you
the
kind of want to,
stacking,
yeah. So
especially when the pivots are so flat. You know, I
mhm,
like when they're all spread and fanned out as opposed to they're flat. It's like I don't want to stack anything. I don't even want to get in there when they're like that.
exactly. So stacking is it's kind of hard to explain, because for me, I've been trading for so long, so I could kind of see things in the market when I see stuff move. Like I
Mhm.
just see these little patterns like pop up, right? Like for example here, I would have stacked these moves right here, because just looking at it, you can see that the pivots were pretty. If I just rewind to here, the pivots here are pretty nice. Like they're not
Yes.
really scrunching up at all. But you know, looking back where we were just looking on the 7th, you can see that they start to scrunch up a little bit
Yes.
as you get to
Yes.
this point, and like right here, this is exactly where I wouldn't want to stack.
A mess.
So yeah,
Yeah.
if I see this mess here, I'm not going to stack. But if
Okay.
I see something smooth like this, I'll
Mhm.
stack. But you know, it's going to be case by case. Like literally, there's no way to really tell if it's going to play out or not. Sometimes luck will be on your side, sometimes it won't.
Right.
But most of the time, what I'll do first is, like for example over here, I'll let one trade hit first, right? So like right here, you can see that we have an entry right here, and then it would hit. So the second time it comes down again right here, this is where I'm like, all right, this is moving pretty smooth. So this is where I'll start stacking.
Gotcha.
Like, for example, over here, the one that we looked at where it would have had a loss, that would be the first entry, right?
Mm-hmm.
So for example, here we have that first entry. We don't have that win yet. We actually have a loss. So I
Mm-hmm.
wouldn't have stacked it. I usually like to, I use the first entry for like coming down as the tester. So I go in with like a smaller lot size, maybe a standard lot. I use that as a tester. If it hits, great. If it doesn't hit, that's fine, because we just tested that wave. Because if you look at US 30, it moves in waves. Like if you find when the wave starts, you can start stacking as it continues on. For example, here you can see that the wave started here, but then it swung up to this point. That's when it started to get messy with the pivots.
Mm-hmm.
So I would have avoided it. For right here, it was just a smooth like little move up from this point, and then it just kept going and going. But yeah, like I mentioned, this is just it's something that you'll pick up like as you continue to apply it. Because I've been applying it like every day, and it's like so clear to me. If I'm looking at the charts, it's like if I see something, I'm like, all right, I'm gonna take it. I don't really think about it, you know?
Gotcha.
Yeah.
Okay, so let's see. There's today, so that would have been the 4:40 candle for you. The 6:40 a.m. candle.
6:40 a.m. today. Let's see. Oh yeah, this is when it started to get messy this morning, right?
Yeah.
40. Yeah, so this is where it started to get really messy. I think this is when we started looking, and I think we took the first scalp that was a loss.
Yes. And I had taken one right before that. And I was trying to see, well, I wonder would have Shawn have taken that one? Because then I was like, oh well, the next one was a mess too.
Oh,
It,
the one right before it at 6:30.
yes.
So I wouldn't have taken that one. I'm not sure if you heard me when I spoke in the live session, but I generally don't want to take trades where it's like right before New York Stock Exchange open because
Before the open. Okay.
yeah, because the 6:30 candle, like the open candle, this one right here, this generally is always manipulated because
Gotcha.
you have the pre-market orders. Like, as soon as the market opens, that's when all the markets get flooded in, and then it spikes price like up or down.
Oh, Shawn, I'm sorry. That would be 4:40 your time. It was
Oh, 440. Sorry. Let me.
6:40 my time. Oh yeah, I know about the not fooling with the first candle.
Yeah, definitely. Let me see. 440 right here.
So that it would have been I think the candle before that.
440. So it'd be. You're talking about this one right here, right?
Yeah, but see, it was on the 5 minute, so I don't think you have a structure on the 10. Oh, there it is. There's a
Yeah,
structure.
it looks like there's a structure right there. Let me just delete.
So maybe I was on the 10 minute. Well, if it was this morning, I think I was on the 10 minutes.
Yeah. One thing that I noticed too is that like I need to start controlling myself and not trading like on Sundays and Fridays. I think Sundays and then Monday morning are usually pretty risky
Oh, okay.
because the price just hasn't stabilized yet. So looking at this here, I mean, I took a loss on it last night too because I took one and I didn't realize that like I forgot that this happened last week where it just dumped
Mm-hmm.
whole stock market. So when the market reopened here on Sunday, it just hasn't like evened out yet. Because
Gotcha.
like usually it has to fill. Like usually when there's a drop like this,
Mm-hmm.
people buy the dip and then it fills back up. And then once it gets back to like where it was last
Mm-hmm.
Friday before that drop, then it starts to go normal
Gotcha.
from that point. So like for me, I didn't wait for it. I was kind of I was impulsive. So
Mm-hmm.
I entered some of these trades here. But yeah, looking at this right here. So yeah, 430. That would have been a valid entry right there. Let me see if the
Okay.
previous ones hit. Let me see if there's ones over here to see. Yeah, I think the reason why I didn't take that one right there specifically, but I did take one that was over here. Actually, I took this one over here and it was actually a good trade
Okay.
because I was asleep. I'm asleep during that time at 4:30, so I wasn't awake. But looking at this right here, because I did take a couple trades. I know I took one that lost. I'm trying to figure out where it was. Yeah, I can't remember where it was, but yeah, just looking at this right here, the one that you mentioned, this right here would be a valid entry right there.
Okay. That makes me feel better.
Yeah, no, definitely. It's just with the market conditions, it's kind of really it's hard to really determine if it's a good time to trade or not.
Mm-hmm.
So that's why now I think I'm just gonna sit out the market Sunday night and
Okay.
maybe like I'll test the waters Monday morning, and then if it's good, then I'll keep trading. But
Mm-hmm.
if not, like say if I take a loss on Sunday and then I take a loss on Monday morning, then I'm like, all right, the market's just not working right.
Ready for me. Okay.
Yeah, because I'm sure you've seen from the back test, most of the time it does work. There's just like
Absolutely.
yeah, there's just patches where it doesn't work, and you have to identify like when to trade and when not to trade.
Right, which is why I'm asking about these specific ones because the rest of them that I did, they were great, but it was these, and I was like, well, was I interpreting something wrong or?
Yeah, no, you were pretty spot on with this. So like right here, we had the rejection off the pivot and rejection of the structure. So this is actually a pretty clean entry. Also,
Okay.
like following this move over here, this is usually pretty smooth as well, since it was already, in a pretty bullish move from market open. So from right here, there's like no reason for you to think that it would, reverse on you.
Unless, and this was another question that I had,
Mhm.
because this has been going up for a long time.
Exactly.
And so it's almost like it kind of just sputtered out. And it was just like, okay, it's time for us to just kind of go sideways for a little while, people, taking off their profits or whatever. And I was just like, well, maybe it was the wrong time to get in because, it had been going up for so long.
Mhm.
But yeah,
Yeah, that
I
usually
got off
happens
on that
too.
one.
sometimes I like to use RSI to see if it's oversold or not, or overbought. Obviously right here, there's no indication that it was overbought or anything.
Wow.
Yeah. So I think it was exactly what you said. Like it was just pushing up for too high.
Okay.
Because there's always going to be people trying to trade the opposite of you. So like right here, this already pushed up like 6,000 pips. So obviously it's way overextended, right? It pushed up 6,000 pips within 13 hours in Asia session, which never happens. So
okay.
So that's definitely something to keep in mind if it's going for too far. But yeah, for example, here I did take this win over here when it rejected off this. I did take this one here. So if that was to happen where I have one loss, like one of my rules is once I have a loss, I just take a break or I wait for it to switch in the other direction. So like for example here, I'd wait for it to come down. So if I did take this trade and I did take a loss, I would wait for it to shift in the other direction or sell instead. Like I wouldn't take any more buys at this point because obviously you can see here that there's more buys.
Right.
So once we eat this one loss, just take the loss, move on to the next one. I wouldn't take any of these other buys here because there's another buy that's available right here, possibly right here as well. And I would just ignore those, even though it probably would have shot up like that. And then this is where you can see that there's manipulation going on.
Ooh. Yeah. Was that at a 30-minute?
It was exactly.
That's what you said.
Yeah, 30-minute and top of the hour.
Okay.
So like you'll see that a lot. That'll happen a lot right there. But like once this happens, then I'll catch the opposite direction. So like right here, I might have taken this.
See, I'm scared to get in those. They're so big.
Yeah, actually, I wouldn't take this because I just realized it's at 640. So this is the opening.
That's the first candle.
Yeah. So this was the first candle right here, and then following it was obviously like another manipulated move.
Okay.
So yeah, this is just something that like it'll ingrain in your mind. Like once you're trading, and you'll realize that, like what I do is I used to journal all my trades. So whenever I have like a bad trade, I'll go back and look at it just like you mentioned, and I'm like, oh damn, it happened like on the 30, or it happened like on market open, and then I'll just remind myself like maybe it's the best time not to trade during those hours. But this right here, this technically would fall as an entry as well. But it's not something that I would have taken because, obviously you can see that it's a crazy move like that. Generally, if this happens, it's probably going to spike back up at some point.
Right.
And with your stop loss so tight at 500
That's exactly what I was going to say.
Yeah.
The candle is so big. So, because I actually like for my stop loss to include level 1 or 2. So I kind of like to get it as close to the pivots as possible. So that way, it's like if my stop is above or below that level 2 pivot, I really feel good. It's like, okay, if it hit my stop, it's more than likely going in the other direction.
The reverse, right? Yeah.
Yeah, but if I'm that far down, I mean,
it would have to retrace up a bit before it ends up in the direction. So like right here, I mean, if you did take it, it would have hit. So this is like one of those things where it's kind of it's like, do I take it or do I not?
Right. Wow.
Yeah.
Okay, let me see. You said after how many? Okay, so you answered that question. After one loss, you sit on your hands and wait for the direction to change. So switching to Forex, I know when you do like not a daily position, but just the typical positions on the Forex market, you focus on the 4-hour chart. Yeah. Have you used the snipe strategy on the 4-hour chart? I mean, on Forex, and if so, did your time frame change, and how does your stop loss and TP change?
Yes. So I do use it on Forex, but I use it on the 30-minute.
30-minute. Okay.
The 10-minute is good too, but the problem with the 10-minute is that there just isn't like usually your spread's going to be so wide where you can't even scalp it. It makes it impossible. I know some people have really tight spreads for like certain brokers. So I don't know if you saw during the live session today, CT was calling like these sells for GJ right here. He was mentioning that, we had entries right here during this morning around 6 until market closed right here. He said to check out GJ, and he took like a triple entry right here.
Okay.
These 3, and he just stacked these up right here. So we took that, and I think he goes for about, on the 10-minute, it's about a 15 pip. I think that's a sweet spot for like GJ.
15. Okay.
So there's different pairs. Like generally, if you want to scalp on Forex, you'd have to use something that's quick, something that moves kind of similar to US 30, which would be like GA, GN, EA, EN, and GJ and UJ, I think as well. UJ and GJ don't move as fast, but the pips are worth more. So you can, you just take a bigger lot size and you go for like a 5 or 10 pip scalp.
Okay.
Because you'd have to factor in the spread. Like for example, here my spread's like 6 pips. It's pretty wide, so you can't really shoot for like, you know, when you're shooting for 15 pips, you're technically really shooting for 10. You have to cover in the spread. So I think the 10-minute works fine if you have a good enough spread where the spread's really tight, but I think you're better off doing it on the 30. So if I go here on the 30, this is one that we actually, I actually use for myself. Let me just close this right here, and I'll pull up GJ. GJ is one of my favorites. I like GJ.
I like GJ. Yeah.
And it moves really smooth, so it's easy for you to really catch moves with it. But you know,
and a lot of pips. It moves a lot.
Oh yeah, definitely. It moves a lot more than like other pairs for sure. So like using GJ for example here, I think 30-minute would be good. I think the sweet spot for GJ, I don't really have a set sweet spot because I don't trade it enough, not as much as US 30 where I know, you know, it's a good price. But looking at GJ here, what I usually like to do is, so if I was to enter, let's see, I'm looking for an entry right here. Okay, for example, right here, we have, or this right here, this red one. It rejects off the pivot and it rejects off the structure right there. So what I generally would do is I'd enter a long position right here. And I think my sweet spot for GJ would be about 30 pips. What I do sometimes is I'll just use TradingView. I'll let it plot it for me. So like, for example, I just use the long tool and it's pretty spot on with like where it wants to plot it. If it's too wide, then I'll make it a little tighter, like a little bit below the pivots. So I think the sweet spot would probably be the 25 pips or 30 pips, but I think 30 pips is pretty solid for the most part. So if you were to shoot for 30 pips there, you know, it'd be pretty nice, little to no drawdown, and straight to TP at that point.
That's interesting because that's actually what I had to do this morning when it was acting funny. When we were taking those scalps, I brought mine down to 30 instead of 50. And so when you would take, I followed you this morning and I took those trades, the ones, I think I had 2 or 3 that won, but I brought mine down to 30 because it was just moving too fast. And I was like, I don't know if it's going to make it all the way to 50. And so 30 is usually my sweet spot on just about everything if I'm scalping. I think the first time I've done 50s is with you on the US 30. So basically on the Forex 30-minute for scalping, and you're feeling like on GJ, it's probably about 25, 35 pips is a sweet spot.
Exactly. Yeah. For the 30-minute, probably 25 to, or it could be even between 20 and 30, just depending on your spread. If your spread's really tight, then you can shoot for 20. You could get in and out pretty quick.
Oh, I'm Forex.com like you.
Okay, perfect. Yeah. So you should be, I think that 25 to 30 should be pretty solid for GJ. I think for EN, that's another one that people use. I know Flynn's been using, I don't know if you follow Flynn in the group, but he's one of the guys in the group. He's been like applying it for Forex more often than US 30 because his account's a little smaller. I think he goes for about, let me try to map this out and see how far it goes. I think he goes for 30 pips as well.
Okay.
Yeah, so it's the same thing here as well. Like, I mean, this wouldn't be an entry, but let me see if I could find one here. Let's see.
Oh, that's pretty. I love it like that.
Yeah, I like these pairs that move pretty smooth and move pretty fast. Like EN right here. This is one that he likes to trade. I think this would be an entry right here. Yeah, so it looks like 30 would probably be the sweet spot for that as well. Because I like to measure it the same way you do. I like to have it like in the middle of the pivots.
Yes.
But this will kind of give you a confirmation that, you know, if price does come down and it stops you out, it's probably going to reverse. So just eat that loss, and then as it comes back the other way, just write it downwards and cover your loss that way.
Right.
Yeah. Because most of the time price, like once it crosses the pivots and it provides an entry, it's usually going to continue that direction. Yeah. So for like EN right here, it seems like 30 pips is a sweet spot too. So it's probably the sweet spot all around for GA, EA, EN, and GA and EA as well.
Gotcha.
But it's something that you definitely, like, once you play around with it, you'll start to figure out what's a sweet spot. Because you like every time, like I mentioned, if you journal your trades and you have losses, you'll know exactly where the stop loss hits. So you're like, all right, if I adjusted my stop loss like 5 pips more,
I could have stayed in. Yeah. Gotcha.
Exactly.
Okay. So the last thing I wanted to talk about is actually FTMO. And I was looking on the website and just trying to figure out how to handle taxes. And then I noticed that there were several different potential balances that you could, challenges. And just, I don't know which is better. Should I start low with 10,000?
I personally wouldn't do 10,000 because, well, I mean, I guess it really depends. The reason why I wouldn't do 10,000 is because if you're looking at it from like a profit perspective, you're really not going to make much money doing 10,000 because like for 10,000, generally your profit target for that month is probably going to be around like 10% on average. So if
Okay.
you're trading 10,000 and you're only going for 10% of that, you're only going to make about 1,000 for like, and you're not going to make money for the first 3 months, right? Or maybe the 2 or 3 months. So
Okay.
you're kind of giving up a lot of profit going for that small account when you could have just went for the bigger one.
Gotcha.
So I mean, I know people do the smaller accounts, but I don't recommend anything less than like 50, because if you're doing 50, so like for 10,000, you're only making 1,000 for the, like, if you even do well, your first funded month. But if you're doing like a 50,000 and then you're going for 10% of that, you could lock in about 5,000. So that's pretty nice. That's like what a normal person would make monthly on a normal paycheck.
So are there limits on how much your profit can be? Because you're putting in that 10%. What is that coming
Yeah.
from?
So 10%, it seems like it's not a lot, but in reality, once you start trading, you'll see that you'll have ups and downs. And at the end of the month, you're going to end around like 10% or higher, around there. Anything above that is just like an outstanding month. But generally, that's going to be like the average. Like a lot of people, like the numbers sound like you can hit a lot. Like some people get way too overconfident. They're like, oh, I'm going to make 50% my first month. But and it's possible. I've made like 10% in a day, and then I've made mistakes the next day where I lost like half of that. So
Gotcha.
it's gonna be a back and forth process. I just don't want to get your hopes too high, right? Because a lot of people they get their hopes way too high, and they end up failing because they get too overly confident. Like they're like, oh yeah, I'll make 10% in like a day or whatnot. And then they start taking way too many trades. They over leverage, and the reason why I have that as the threshold is because you can only risk 5% in a day. So in reality, you're going to have to limit yourself if you end up losing some trades. And then, over time, it's going to average out to about like maybe 10, maybe 20% if you're having a really good month. But I've been doing this since like June, so I understand how it works. I've gone through the ups and downs. And like once your morale goes down, like if you have like a losing streak, that losing streak is going to continue, and then you're going to be in a hole, and you have to make yourself like bring yourself out of that hole. And it's not going to be as easy as it sounds. Like a lot of people think, oh, I can just flip the switch and I'll be good, the next day. But in reality, it's going to be like you're probably in a hole for like a couple of weeks, maybe a month or so. Because I've seen people in the group where they got funded, they made their first payout, and then the next month they just lost like nearly they brought their account back to like 91,000. So they're on their last 1,000, and they're just growing their way back, being very careful to that point. So I don't have nothing bad to say about the 10,000. I just don't think it's worth your effort, because you're going through the whole challenge. And if you could pass it at 10,000, why can't you pass it at like 50 or 100?
Right.
So 10,000 is fine if you want to start. I would just do the trial. Like, have you seen the trial on there?
I just saw that actually. Is that brand new? Because I've looked at it before they did all these changes. I'd never even heard of it, seen the trial. What is it, basically the same as the actual challenge?
It's pretty much the same thing, but you're not actually making any profit off it. You're able to like just test it out and see, how well you do.
Okay.
And then, once you pass that trial, then you'll have the confidence to go do the real thing.
Okay. So that's before you pay anything to even do the challenge.
Exactly. Yeah, exactly.
Oh, okay. Okay.
So if you feel confident with that, I mean, if you really want to, you can do the 10 and then you can just merge them later on. But it kind of doesn't make sense, because say if you're doing 100K and you make 10% the next month, you wasted like a whole month to get that 10%, the 10,000 account, when you could have just made it on the real account.
On the real one. Yeah. So that 10% is basically, you're just saying that's your average return on investment in a month. So it's like not any, I thought there was a limit on what FTMO was saying you could make in a month.
Oh, no. Yeah, it's just average.
Okay.
Yeah, it's average from like my perspective, because before, well, it's kind of different now. So this is a whole different game, because before I was just doing the daily entries. So, I'm doing one trade a day. I know what my risk is going in and out. So 10% was the average there. I think now I can make way more if I'm doing the scalping.
Right.
So this is just from my perspective, doing the one trade a day. And if you're doing one trade a day, and you only take 4 trades a week, your percentage can only be so high, right? Because it's going to be back and forth. But now that we're scalping, if you have a hot streak, because I remember the first time I did FTMO, or for my second account, I forgot that I had a challenge going. I literally had one day and then it was just at 100K because I never traded on. Well, I traded like small positions, but I never like went for that goal. So what happened was like I had 1 day left, and I was like, okay, I got to scalp because I got to make my money. And I ended up passing it within 1 day. Like
Oh, wow.
Yeah, a full 24 hours. I'd locked in about, I think at first I locked in a 10,000, and I was like, I want to make sure that they pass me. So I got in another 2,000. So I went well over the threshold.
Wow.
And then I passed my challenge within 24 hours, just scalping US 30 throughout the day.
Mm-hmm. Wow.
Yeah.
So how do you handle taxes? Because they're in another country, so they don't send like a 1099. You just put in, I mean, do they give you any paperwork on the profits that you make back after the challenge?
So it's my first year doing FTMO, so I don't have, I don't know yet if they're sending me
Okay.
anything. But I do have everything documented because I run my profits through a company. I have it through an LLC, which is like taxes and S corp. So the way that they pay you is through invoice. So it's not like trading profits. It's more so for your services for trading their account. So profits are different, you know, that because normally if you're trading an actual account, you get taxed like capital gain.
Yeah, capital gain.
And that's what I like about FTMO because they pay you as a service. So like for me, it's a business. So like I'm able to, you know, deduct expenses and stuff. But for if you're just doing it through personal, it would just be taxed as like self-employment income.
Gotcha.
Because you're doing a service for the income.
Gotcha.
So yeah, I mean, it just depends on how you do it. When you get your contract for the funded account, they'll ask you if you want to, you know, register it as a business or like do it through personal. And I did my business. So obviously my situation is like different from others. But you can always like switch between. So you can start as individual, and then if you feel confident enough, you're like, okay, I'll move this into a business account, and then you can do it that way. But obviously, you know, the best to have the best tax benefits, you obviously would want to do it as a business.
Oh, absolutely. Oh, I already have that set up. I'm ready. I don't do anything through my personal anymore. Everything is, you know, a write-off. It's all business. So
same here, exactly. Yeah, no, definitely. And I was thinking about even making like multiple ones for FTMO because you know, I'm already getting capped out at the 300K. So I'm thinking you know, maybe start one for I'm doing that already. I'm starting one like for my mom, my dad, you know, their own separate business stuff like that. And
so
then
you
my
can
trades
only do 3? You can do up to 3?
Per person you can only do 3.
Okay.
But obviously, you know, you can do it for other people as well.
Gotcha.
Yeah.
Gotcha.
I just don't want to, I wouldn't want to step on their toes because obviously, you know, I'm already like reaping the benefits of this program that I don't want to go overboard. But they do so I think once you get to a certain threshold, they can increase your balance. So your max balance would be 300K because it'd be 300K count. And then you can keep scaling it higher and higher. I think up to like 500K. I haven't gone to that point yet, but I'm probably going to get to that point this year for sure.
So when you when they send you your profits, that doesn't bring your account down?
It does. So it resets it back to 100K.
Oh, wow. So every time you take whatever is over 100K, they give you 70% of that, and then it brings it back down to 100 every month.
Exactly. So it's like a brand new account.
Gotcha.
Yeah.
Gotcha. Okay.
But you don't need to. You can leave, like if you wanted to have some cushion for like the following month, and you can leave money in there. But now that I moved to like the scalping model, it doesn't really affect us because we already know our risk going in and out of the trade, you know, and we're not expecting to have so many back-to-back losses where I even have to worry about reaching that 10% less than a threshold for the equity because I'm only risking about like 500 to like 750 a trade.
Okay.
So I understand, you know, like for example, I think I did the math where like if I need to lose 10,000, I divide that by like, you know, 500. 500 divided by 10,000. Oh, sorry, math is off. 10,000 divided by 500. I'd have to lose like 20 back-to-back scalps.
Gotcha.
And that's not going to happen.
Not going to happen.
Because like I mentioned, like
you'll stop.
I'll stop. Yeah, I have one loss. I'm like, all right, I'm gonna take a break, and I'll come back. And then probably by the time I come back, the new wave starts, and I could just keep making profits off that. So at that point, I'm fine with just withdrawing my money because I'm not going for those home run wins. You know, it's like I've realized that like over time that those home run wins aren't really worth it because sometimes you'll go for like you'll be in profit 10,000, and then you go for that home run win, and then you lose like 2,500, and you're like, dang, I could have scalped 5 times, and I could have been fine.
Right.
Instead of going for that one trade.
Small and steady. Yeah. I'd rather small and steady.
Exactly. Yeah. So like for me, I just withdraw the entire amount every month
Okay,
just to so I feel it. I feel that it's real because like
right.
yeah, for a lot of people, it's like a lot of people they don't like they don't really care and they just leave their profits in there. They never take the profits off the table,
Hmm.
and they could have one bad month and they'll just end up losing all of it when they
All
could have
of it.
had that in their bank account. You know?
Right, right,
Yeah.
right.
Because if I
Wow.
do like I don't think I'm going to, but if I ever do fail in like a funded account, I'll just do it again. It's not that difficult,
Hmm.
especially with the scalping.
Hmm.
And all market conditions are going to change, so it's inevitable that it could or might not happen. But who really knows? You don't know what's going to happen tomorrow.
Right, that's right.
Yeah.
Okay, sir. Well, I think that was all my questions, and I think I'm ready. I just got to practice a little bit more, do a little bit more back testing to see if I would actually get into trades and see if I would win those. And I think I'll be ready. I think I'm going to focus on the US 30, GJ, and that's probably it. Because if
That's
I can
yeah.
learn those and learn the movements, then I don't need anything else. I just, I want to kind of master a couple of things and just do that.
Exactly. Yeah, and I'm in the same boat too. Like for me, it's just US 30 pretty much. I'm
Hmm.
probably gonna like add in something else, but I
Oh,
don't want
you
to
were
add in
talking
too
about
much.
the other indices this morning, like
Oh yeah.
the a friend of mine told me the Russell move, the M2K moves more smoothly than the US 30.
Oh
But we
wow.
can't get the Russell on Trading View. There's some other what you
Yeah, the
call
Russell 2K, right?
it? M2K. Yeah, the Russell 2000. Mhm.
Yeah, Russell 2.
It's
Oh, there we
delayed.
go.
Yeah, it's delayed on there.
Oh, it is delayed.
Hmm.
Yeah, because I don't think we have the actual data for that.
You
Uh,
have to pay for it,
oh gosh, okay, no, that makes sense.
like through Tradeovate. I think that's one of the brokers.
Yeah, actually, yeah, I pulled it up right here. It's called US 2000 for Forex.com. They actually have it
Oh,
here.
Forex.com has that?
Yeah, it looks pretty smooth.
Oh, wow. Oh, maybe when I tried to paper trade it on TradingView, it told me I needed data.
Oh
Does
yeah,
yours
most
say
likely.
delayed?
It looks pretty solid to me. It looks like it's moving. Let me see.
Oh, let
Yeah,
me
it's
write
moving.
it
It's moving real time for me. It's called US
down.
small cap US 2000.
Mm-hmm. Gotcha. On Forex.com. I did not know that.
Forex.com. Yeah, this actually looks really good. I might start looking at this as well.
Yeah, he scalps it. No, he does it he day trades it on the 1 minute and the 5 minute,
Oh wow, it's crazy.
specifically on the 5 minute, and then confirming entry on the 15. But he uses some of John Carter's indicators, the trend indicator and the squeeze.
Oh, gotcha. Yeah, yeah. A lot of people in the backtesting group, they use the BB squeeze
Mm-hmm.
indicator as well. They look for like when price is consolidating, and then
Mm-hmm.
they catch those breakouts. Uh,
Exactly.
yeah, and
Exactly.
it works good with the momentum indicator too. I
Mm-hmm.
forgot how they did it, but like a few of the guys, they wait for it to like just consolidate, and then once it breaks out of that little range, they just
Yes.
catch that right up, and then
Yes.
they ride it all the way up.
Man, that looks really smooth. Even this morning. That's from, wait, let me see.
Yeah, it's from this morning. Let's see. So this morning right here, yeah. So you could have taken, I
Looks better
guess,
than the US 30 look this morning. Although
right?
that little area right there is a mess.
Yeah, this is a mess. Yeah, but you know what it looked like. Like when you see that happening where the pivots start crossing over, you're gonna know not to trade during that
Not to
mess.
trade.
Yeah,
Mhm.
but it looks like everything else, like right here, it looks pretty smooth for the most part. Like a couple entries right here. The only problem is you have to find the sweet spot too. So
Yes.
it's just I think it comes with a lot of testing. Like for me, I back tested US 30 so far back that I know exactly what's good and what's not.
Hmm.
For something like this, yeah, it would just need some back testing. But I think once you have it down, it could be pretty solid for the most part.
Yeah, I have to look at that one. He uses a he only like enters when it's at the top of like a Bollinger Band.
Oh,
And so he has like a 10 50 or 100 pip 50 pip, 100 stop loss 50 pip reward. I mean
oh,
profit
gotcha.
target. Yeah. So and so he's got a wonderful risk to reward ratio, but he only gets in, when it's like at the top of the Bollinger Band and about to do a reversal on the
Hey,
5.
that's actually a pretty good idea because I was looking for maybe any other confirmations that we could possibly use.
Hmm.
Um, I mean, I don't really like Bollinger Bands myself, but I guess if you were to
Yeah, see, like on that candle right there. Wait, what is that? 31st. That one, the dip.
Oh, this one down here?
Yeah, that dip. So he would have just stalked it down as it was coming down. Well, see, this is the 10. He'd be on the 5. But
Oh,
once he saw that dip, that long wick right there, he would wait for the open of that next candle. And once it broke the high of that, I call it the anchor candle, but once it broke that high, he would get in. And then his risk would be 10 pips, 100 pips below the low of that anchor candle. And then he'd go 50 pips up, 500 pips up.
Gotcha. Yeah, that's something that I used to apply before too. It kind of goes, it kind of uses the similar principles that we use for the scalping strategy. It's just a little different. Yeah, it looks like, if you were to catch wherever it wicks from that point, it's kind of similar to what we look for, except we're trying to catch it in the same direction of price. For him, he goes for the reversals, it looks like.
Exactly. Yes. He goes for the reversal. Yeah. So.
Yeah. I used to trade like that, and I used to get burned all the time. So like this right here, you can see these look like nice wicks, but if you were to take every sell right here, you get burned all the way up.
Right. Yeah. And so I think he has a strategy kind of like yours. After a certain number, he just gets out. It's like, oops, 2 losses. I'm done let me wait, so he doesn't blow up his account. But yeah, that's what he does. I followed some of the stuff, and it's just like, you know what? He was doing it on the 1 minute. I'm like, that's too fast for me. I don't have time for that. Somebody this morning was talking about getting my blood pressure up on all these candles on that US 30. I'm like, that's too much. So.
Oh yeah. Like that's why I go on the 10 minute, because the 10 minute, it's fast, but it's not too fast. It's enough for you to like actually, take out all the noise. Because the problem with scalping is really distinguishing noise from actual moves, right? And I found that the 10 minutes pretty solid. It's enough for you to, you don't have to be on the chart all day. Like I on the chart in the morning, and you can be good, and you make a few profits here and there. And then if you want to hop back on during Asia session, you can just, or you can even just set alerts. Like what I do is I just set alerts on my candles actually. So if I ever wanted to wait for it to come down, I don't know if you saw me do it earlier today, but I just like right click on the pivots. I click add alert, and then I change this condition to that. Oh, actually, it's very good. It's at the actual asset, which is the Russell 2000. And then I change this to K2 pivots level 1. So whenever price comes down and touches the pivot, it'll notify me. So I'm like, all right, cool. I should probably look at the chart.
Right. Gotcha.
Yeah. So yeah, that's what I like about the 10 minute. And it's probably something that I'm gonna stick on, because I feel like on the 15 minute, sometimes it comes too late.
Yes.
And on the 30 minute, a lot of people like the 30 minute, but I don't like it because there's just too much risk. I don't mind losing 500 here and there, but if I'm losing like 1,500 here and there, it's gonna start eating in my
right.
Yeah.
Okay, sir. Well, I sure appreciate your time. This was awesome. I appreciate it.
Yeah, definitely. I'm excited for you to start that FTMO.
Yes, yes, I am. I have to put some notes in the chats when I'm on there, like everybody else puts on there. I got funded on my FTMO, so I have to make sure I let you know.
Definitely. So I'll be in the next 30 days from now.
Yep, that's right.
That played out.
Thank you so much.
It's good talking to you.
Okay, bye-bye.
All right, definitely. See you later.